This video is dedicated to my biggest fan, Lawrence, who is going to be flipping out if he watches this video, because we're actually going to be talking about tax. And if you, as a small business owner, were to move your business from the UK to Dubai, how much more of your money you'll keep because you won't be paying tax. The numbers are pretty cool. Let's get started. Now, let's be honest. One of the reasons why people are moving to Dubai is because of the tax regime. It is very, very attractive. And it's even more attractive if you're a business owner who has spent your time, energy, sweat, tears building your business, and you feel like your business isn't necessarily providing you with the lifestyle that you hoped for. The fact that you have to pay corporation tax and personal income tax in the UK, that money not being in your pocket, is a big factor in people's decisions to move here. And me personally, I moved my business here last year. It was nerve-wracking because I was always worried about the process and how difficult it might be. And bearing in mind, if you're trying to do this, you've got to do this from the UK, finding someone that you can trust. I was really worried about that. But I have to say, the process is really, really simple. And credit to the guys here in Dubai, the government here in Dubai, for making the process so simple. All I did is I filled in some forms, I signed some documents, and everything was taken care of for me, from literally the business opening to the medical tests I had to do, Emirates ID, right down to my business bank account. Now, if you're in a position where you are aware of Dubai and you're thinking about moving here and you're worried about the process, I can't recommend more the guys at GenZone. They're absolutely fantastic. Kevin and the team, they've helped over 600 companies move to Dubai. They are extremely experienced. Their testimonials are stellar. I had one of my coaching clients, Mel, use them this past month to set up her business. Couldn't have said better words about Kevin and the team. I'll leave a link to them down below. It's a completely free session that you can book with them. Just take the meeting, ask some questions, get to understand what the process might look like for you if you want to move here. But in this video, what I want to try and do is just give you an indication of how much money you can save. And I'm going to do that by way of a case study. Small business owner, £150,000 turnover. Every business has a cost of sales or cost of business. Let's just say for you to operate, you've got £50,000 in costs, right? So that's going to bring your profit down to £100,000. Now, corporation tax is paid on £100,000, but what you can do is, if you're taking a salary from the business, your salary is deductible from your profits. Now, if you are working with an accountant, your accountant probably told you day one when you first met him to take your salary, but to take your personal allowance. So 12,570, because that's how much you can earn before you start to pay income tax in the UK. So you may be taking £12,570 as a salary from your business. So when you deduct your salary and you deduct your cost of business or cost of sales, your profits are now £87,430, which is what your corporation tax bill will be based upon. Now, 12,570 is not going to be enough for you to live on. So what you're probably doing, again, with the advice of your accountant, is taking a dividend. So let's just say you're taking a dividend of, say, £5,000 per month. That's £60,000 per year. It means that the income that you're generating from the business is £72,570, right? Make sense? So with that all brought into the equation, you have to pay corporation tax on profits, and a dividend payment is not a deductible like your salary. So in this position, you're taking 72,570 in income from your business, but your profits are still 87,430. So what does your corporation tax bill look like in that scenario? Now, with corporation tax in the UK, we've got a main rate, which is 25%. And 25% is if you're making profits over £250,000. If you're making profits up to £50,000, it's 19% that you pay as a base rate. But anything from 50 to 250, there is a taper rate that is applied that takes you up to the 25%. So in this example where your profits are £87,430 a year, it means that because of the main rate and the taper, right, that you're going to experience because your profit is 87,430, you're going to be paying around about 22.21% in corporation tax. That will be your corporate tax bill or rate. So that will bring your bill to £19,418.95. This is just a breakdown of that calculation here on screen. So that's your corporation tax. Now we have to look at your personal tax. Now on the personal tax side of things, you've taken a salary, but you've taken the salary at your personal allowance. That 12,570 is not taxable. But what you have done is you've taken a dividend from the business, which means that whilst dividends is a rate lesser than your income rate of 20%, you've got to factor in the fact that you've got to pay dividends. And by the way, you don't pay dividends here in the UAE. So your dividend, you're going to have a dividend allowance, which is £500. You can take the first £500 completely tax-free, which means you're going to pay dividends on £55,000. Now, there are two stages in which you're going to pay this. So anything up to £50,000, you're going to be paying 8.75%, right? So the majority of it is going to be taxed at that level. Then because you're taking 55,000, it's going to take you over the basic rate taxpayer threshold. On a portion of it, you're going to be paying 33.75%. So when you look at your dividend tax bill, it's going to come to 10,660 for the year. It gives you an effective dividend rate of 17.77%. Okay, so you've got your personal tax bill, which is via dividends of 10,660, and then you've got your corporation tax bill of £19,418.95. The combination of those two means that your tax bill, if you remained in the UK for that year, would be £30,078.95. I would say that's quite a lot of money. Now, when you juxtapose that to the UAE, in the UAE, there is no personal income tax. There is no dividend tax. You will pay corporation tax though, but there are gateways to which you start to pay corporation tax. And to explain this, I actually have Kevin from GenZone, who I sat down with a couple of weeks ago on the podcast, to explain how it actually works. Listen to this.
So how does corporate tax work? You mentioned it is 9%, yes. But the way corporate tax works, it's kind of like an if this, then that format. Mm-hmm. And I'll explain how it works. So if you made there's a threshold of 3 million dirhams. If you make anything below that, ignore corporate taxes, ignore anything. You don't have any taxes to pay.
Okay.
All right. If you make 3,000,001 dirham, right? So even if you made 3 million flat, if you made 3,000,001 dirham, now you have to potentially pay corporate tax.
Okay. I thought it was lower than that. I don't know why I had a figure of 385,000 dirhams or something.
No, you're on the right path.
Okay.
You're on the right path. So remember how I mentioned it's if this, then that?
Yeah.
So this is where it comes in now. So you're not off. You're there. So if you do go above 3 million, so let's say 3,000,001, then now the government will say, all right, this business is no longer a small business. We are going to tax it on its net income now. Right. So the 3 million is a revenue threshold.
Yep.
If you go above that, now they're going to say, all right, what's your net income? So let's say you told me your net income is 400,000. What they'll do is they'll say, well, we'll give you the first 375,000 dirhams tax-free.
Free. Yeah.
We got you, no worries. Welcome to Dubai, it's fine.
Yeah.
But anything above 375,000 dirhams, please just give us 9% corporate tax.
Nice.
That's exactly how it works.
Nice.
So in the case where you made 400K, you're really only paying 9% on 25,000. Which is nothing, making your 9% tax rate really just like 1% or whatever the math comes up to be.
Yeah.
And that's how taxes work.
And when you look at it from that point of view, it's very, 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 very compelling a proposition to think about moving to the UAE. Especially when you consider the other things around the fact that the city is so safe. It's one of the safest cities in the world for women, for families, for children. You've got world-class infrastructure here. You've got world-class education here. You get a better lifestyle. You get a better climate. When you start to stack all of these things up, you'll get into a really compelling argument. Now, obviously, I spoke about my experience moving here and I talked about the guys at GenZone. I just want to leave you with some tips that for me were really, really important in the process of thinking and actually moving my business here. So the first thing is, please make sure you pick the right free zone, okay? Now, free zones are for businesses that perhaps are like mine, they're digital businesses. I've got a YouTube channel, I do coaching, I've got clients back home. I'm going to be coming back home twice again this year. I'm coming back in a couple of weeks' time. I'm coming back in September. I've already been back in March, but most of my clients are in the UK. So a free zone company for me is perfect, but not all free zones are made equal in the UAE. So it's really, really important that you make sure that you pick the right free zone. Again, working with a company that understands how these free zones operate and which free zone might be best for you based on your requirements. There are free zones where you'll find offers online where they'll say it's going to cost you £1,000 to set up your free zone company. I can guarantee you that's going to be in a remote free zone, which will probably cause you problems a bit later on. So again, it's really important that you speak to someone who actually knows about how the free zones work. And again, the guys at Gen Zone can really, really help you out here. The second thing that I've gotten written down is getting guidance on your activities. So much like home, you've got to kind of classify your business in terms of what you actually do, right? So, and it can be really, really confusing because I looked at the list of activities and I asked, so where do I'm not really too sure where I fit, because it's like when you, if you're, for example, for me, my activities here are marketing services and in social media effectively, and consulting. Those are the two categories that I have. And marketing services because I work with brands online to promote financial products. I work on my main channel, that is, and I also do a little bit of work with companies out here with helping them with their social media messaging. So that comes under the marketing banner, but I had to add the social media element for it to make sense. So it's not just broad marketing, because there are lots of different ways in which you can market. So picking your activity is really, really important, and being accurate on them is really, really important as well. It could cause you issues later on once you start getting clients, and maybe you're going to have money being sent to your account. So please make sure you do that. But again, if you're working with a company that can help you set up your business and knows the ins and outs, they can advise you on that as well. The last thing that I've written down is make sure that you get your tax registration done correctly. Now, on the podcast, Kevin talked about the fact that you do have to do accounts like you do back home. Like, just because you're paying, no personal tax and there's very little corporation tax doesn't mean that you haven't got to do returns. You've got to do returns, but you also have to make sure that your business is registered for federal tax here in the UAE when it is opened. Otherwise, you get fines if you fail to do so. And again, you're going to see offers that will say it's going to cost you £1,000, £2,000 to register your business. I guarantee you they're probably cutting corners, and this might be one of the corners that they cut. And you don't want to get on the wrong side of the authorities out here by not registering your business for tax as you should do, because the returns for tax are going to be due from September this year. So please make sure that you're working with the right type of companies that can really, really help you. And again, I can't recommend enough the guys at Gen Zone. Look, so there it is. That's just an overview. Obviously, we looked at a company turning over 150. If you're turning over less, you can do the same calculations. ChatGPT can help you out with that. If you're making more, then I would argue that the incentive on how much you can save on a tax point of view makes it even more compelling. But at the end of the day, you've got to make the decision for yourself. But I hope in some way, shape or form, this has been helpful in, helping you make a decision and maybe helping you along in your research. But let me know what you think in the comment section down below. If you do have any questions, let me know. I have a free Telegram group, so make sure or feel free to go and join that and ask questions in there. I will catch you later on. Cheers.